to another episode of the Ratings Rundown by Evergreen Ratings. I'm Angela Ashton and I'm a Director of Evergreen Ratings. Today we'll be discussing the Hope Housing Residential Property Fund, which has been rated satisfactory by Evergreen Ratings. Please visit our website, which is evergreenratings.com.au, for the full report and a copy of our ratings scale and other information with respect to the rating itself. Ratings are only one factor to consider when you think about potentially investing in a product. My guest today is Phil White. He is CEO of Hope Housing. Lovely to see you, Phil. Thank you for joining us today.
Thank you for having me, Angela.
Let's get started. How would you introduce Hope Housing and your overall investment philosophy?
So Hope Housing is a not-for-profit fund manager, and we're born out of the family of Pacific Equity Partners, and we've been shaped by an eminent group of our advisory board. We raise money from wholesale and institutional investors, which we then co-invest alongside Australian central workers to allow them to buy a home close to where they work. I'll describe it as a responsible investment in Australian residential property. We have got RIAA certification on the product as Sustainable Plus, and we're offering a target net fees of 10%. Our fees are capped at 0.75%, and again, in line with our not-for-profit status, as we grow, we expect those fees to reduce. So overall, the residential property market provides an interesting opportunity for investors. It has low volatility, it has a low correlation to the traditional asset classes, and we think it's really resilient to economic crises. So a great addition to any investment portfolio.
So I'll just point out to the listener that RIAA is the Responsible Investment Association of Australasia. So it's sort of the peak body for responsible investing and ESG investing. So, Phil, you've recently completed an impact report. Would you like to tell us a little bit about those findings?
Yes, thanks. Look, really interesting. And again, I recommend that people go to our website and have a look at the report. It's quite comprehensive. I think we all would understand that housing and housing security and financial security that goes along with that is a really important part of physical, emotional, and family well-being. And our report goes to that. We use a social return on investment methodology that's been developed with Centre for Social Impact and Think Impact to measure our social impact. And in 2025, it showed that it was 14.6%. In the prior year, in 2024, it's 14.4%. So that opportunity to own a property close to where you work, and one of our criteria is they have to be within 30 minutes commute of their place of work as part of our agreement to co-invest alongside them, makes a huge difference, not just to the essential worker and to their family, but also to the workforce and their employer and the community at large. So one of the interesting findings in this year's report was that in addition to all the benefits to the individual essential worker and their family, was that they reported 25% improvement in productivity and a 40% increase in the probability of staying within their profession. Now, that I think is fantastic, both for them, but also for the community at large.
Yeah. No, that's great, Phil. Thank you for that. How does the Hope proposition for investors stand out, do you think, compared to other property investments?
Yeah, first and foremost, it's Australian residential property at scale through a very efficient model, quite different, obviously, from the commercial property, and performs quite differently from commercial property as well. We invest in a diversified portfolio of residential property that's owned and occupied by Australian essential workers. So effectively, investors get to own a little bit of that Australian dream that's looked after by the people who actually own the property. In terms of how the model works, we have a preference for houses over units because we know that based on historical performance that houses will perform better over the long term. And by selecting good quality properties in great locations, we expect to outperform the residential property market by about 1.5 times. The way the investor also benefits is that the homeowner pays for all those buying costs, all the maintenance costs, all the repair costs, and all the holding costs associated with that property. As this is an owner-occupied model, the investor actually avoids a whole lot of costs as well, which they'd have through traditional direct investment. So they don't pay any property management fees, they don't pay any transfer duty, and the big one is that they avoid land tax. So if you actually just look at those two features alone, that more than compensates for the fact that there's no actual rental paid on the Hope share of the property. So overall, and of course, the risk factors that we should be taking into account as well. There's no vacancy risk because it's owner occupied.
Yeah.
There's no state and territory tenancy act risk. There's no tenant default risk. None of the challenges that you have with a landlord. And of course, it's very timely with what's happening with other changes to tax laws that, again, they're not affected in the same way if they're invested in home.
Yeah. Yep. Let's talk about the liquidity of the fund. Could you perhaps run us through how that works and what people should be looking for and at if they invest in the fund?
Sure. So the Hope Housing Residential Property Trust is structured as an open-ended, unlisted property fund. So it has the typical liquidity features that when properties are sold or refinanced, that creates a liquidity event. We obviously have cash in the fund that we can use for liquidity and for redemptions. And we also expect there to be a secondary market to develop over time. So they're the typical features similar to a normal property fund. We have additional liquidity features. So every year, our homeowners are offered the opportunity to buy back from Hope some of the equity. We both have this expectation that they will own the whole property in due course.
Yeah.
So in 2025, our experience was that 5% of the fund was actually bought back by the essential workers who are actually the homeowners. So as there were no redemption requests, our board and the trustee decided that they'd actually help another essential worker and have reinvested that money.
Right.
One of the additional liquidity features that we've put in moving forwards was we've actually put in a 3-year mandatory buyback. So every 3 years, our homeowners will be reassessed for their ability to borrow by our partner bank, which is currently Police Bank. If they can borrow more money, they're obligated to re-gear and borrow additional money to buy equity from Hope. The final piece from a homeowner perspective is when they've paid off their home loan, and this is a bit of a backstop for us, but by the time they've paid off their home loan, they have 12 months in which to completely refinance Hope out of the arrangement. And that could include using something like a reverse mortgage. We are very conscious of property funds typically not being very liquid. So we have added an additional feature in this time when we're formative and growing that up to 20% of new invested money is going to be put into a liquid redemption facility, quite possibly one of the PEP funds that will be much more liquid, and that'll sit alongside the property. But we also know that when we're large and the portfolio is mature, that we're going to have properties selling all the time, home buyers and homeowners refinancing us regularly, and these equity buyouts happening on a regular basis. Our modelling shows that we'll be creating liquidity of about 12% of the fund when we're stable. So we've got some additional features in the short term. We'll be liquid in the long term. But I suppose we should remember that this is a long-term investment. Housing cycles typically 7 to 10 years. So we would be saying to investors that should be your investment horizon. And again, the redemptions are there. They're capped on a quarterly basis at 5% of the fund. And they can only be redemptions if there is liquidity available in the fund to do so.
Okay. So how does the fund generate a return?
So as I mentioned, when properties are sold and when we're refinanced out or those equity buyouts, all of those are done at the current market price. So the fund actually's income is generated from the capital appreciation of the properties over time. And that ends up being the gross return. I mentioned we're not for profit, so our fees are capped at 0.75%. That will give you the net return. And because we have this homeowner paying all of the costs and the investor avoiding what would be some of those traditional costs, the fund should be getting a target return of 10%.
How does Hope integrate the key social aspects of what you're doing with the financial returns that investors expect?
Great question, and I'd say it's by design. Hope is a convergence of two problems into one solution. So the first problem was accessing residential property market at scale, having a wholesale and institutional product that we can scale efficiently. The second problem was that our essential workers are being pushed out of the cities that they serve. And we know that over time, it's been harder and harder for them to buy homes in the communities they serve. Recent research that we've looked at shows that home ownership rates is dropping across all of Australians. I think we've heard a lot of that in the last few weeks with the 2026 budget. But for essential workers, their home ownership rates are reducing at 1.5 times what it is for non-essential workers. And the example I like to use is in 1999, a registered nurse, it would take 5 times her annual wage to buy the average house in Sydney. It's now over 18 times. Even in our most affordable cities, so the Hobarts and the Darwins, it's still 8 or 9 times. I think if you look at the likes of Brisbane, it's sort of 14 times, all completely unaffordable.
Yeah.
So that whole idea that these people can save a deposit and use a traditional home loan to buy, that's gone. We know that house prices are continue to probably outpace essential workers' wages. So we've now got this permanent gap, and that's what Hope is designed to fill, is to fill the gap that's now left from a traditional home loan and deposit.
Yeah. Let's talk about the budget. And obviously it's been extraordinarily topical recently, and there's some, repercussions, I guess, through residential housing as well. Would you like to sort of take us through what you think the changes will be, and in particular how it might affect Hope?
Certainly, and obviously there's still a lot to be seen in terms of the detail of how that works its way through. But
sure.
Firstly, we take a long-term view on the property market, and I think that we all commentators agree, that house prices are continue to rise. Even the Treasurer said that on budget night, that he doesn't expect this to be reducing property prices. And for freestanding homes in desirable suburbs, which is typically where Hope's investing, I don't think we'd say that's going to be definitely true, that the house prices continue to rise. We also agree that the residential property investors do compete with owner-occupiers, which can be challenging for owner-occupiers that are trying to either get into the market or to upgrade. And we also agree that the negative gearing changes and changes to capital gains tax are going to make it less desirable for investors to invest directly. For Hope, with this, we give investors the opportunity, instead of competing with owner-occupiers, to actually collaborate and invest alongside owner-occupiers. So I think what the budget's doing and what the government's trying to do to improve home ownership rates falls right into where Hope is. I think the timeliness of Hope coming to market and looking to scale is perfect for this budget, and gives investors an alternative option to invest in property, and arguably a better way to invest in residential property.
Yeah. Okay. Well, thank you for that, Phil. That's the end of our conversation for today. Please visit evergreenratings.com.au to get the full report, to have a look at our rating, and have a look at the Hope Housing Residential Property Fund itself. You'll need to log in to get the report, but subscription is free, so feel free to register and get that report. You can also find out more about Hope themselves at hopehousing.com.au, and the link is in the description of this podcast. Thank you for your company. Thank you for your time. Thank you, Phil.
Thank you, Angela.